Hi everyone, and welcome to today's SimulFund 360 and SimulInvest 360 monthly webinar. This is for September 2023. Okay, like always, today's session will be recorded, and a copy of that recording will be available on BGL's YouTube channel, and a link to that will also be emailed to all attendees. If you have any questions throughout today, please enter them there into the Q&A panel, and a few of our BGL team members are logged in at the moment and happy to answer any questions you do have. And obviously, Aaron and I will always come back at the end to answer any questions you do have. As per normal, I'll give a quick BGL update about what's changed over the last month. Joined, as always, by founder and CEO of Smarter SMSF, Aaron Dunn.
Hi, Jevon. How are you?
Very good. How are you?
Yeah, good. Thank you. So looking forward to, sharing a bit of an update. We've obviously got one of the interesting elements that we've been waiting on a long time for now in Parliament on the non-arm's length expense rule. So touch on a little bit of that shortly for our audience today.
I remember the last one was a hot topic with a lot of questions, so it'd be interesting.
Yeah, I'm sure there will be.
So yeah, if you do have any questions, as mentioned before, for Aaron or myself, please enter them there in the Q&A panel. So if our team members can't answer those, we'll cover them off there at the end. Okay, let's get across now into the BGL changes. So we released an update a few weeks back on the 7th of September. And we've also got an update going out tomorrow afternoon. So obviously continually driving change throughout there. Let's go through and look at the changes, some of those that occur. I'll just cover the major items as per normal that was in that 7th one. So let's start with the Division 7A loans. So I covered last time, obviously within SimulInvest 360, you can utilize the new Division 7A loan screen to obviously record the loan transactions, to obviously track, calculate also the interest occurred during the periods, calculating your repayments, use that particular worksheet. But a couple of enhancements we've made there is the ability there to now post dividend and interest payments, and also export the worksheet out to Excel. So let's have a quick look at that. So jump across here into SimulInvest 360, and we'll go across to the Division 7A loan screen. So this one here I've already created. So in terms of loans, obviously you can add the various ones there. You can actually utilize this screen also for companies or trusts not in SimulInvest 360 if you'd like to utilize that as well. Obviously you need to put in the particulars. What we now allow is the ability there to select a interest account. So that was something that was new that was added. Obviously that will automatically post the interest transactions. And that allows a bit of flexibility there. So you can have obviously a separate interest account per loan, or if you'd like to amalgamate all the loans to post to the same interest account, you can do that as well. So you've got the flexibility there of what you'd like to allow. So we'll go through and we'll just save that. So now in terms of our loan worksheet, this particular loan doesn't have any repayments. So if I'd like the minimum repayment to be calculated there as a dividend, the function here is available, pays dividends. So I can go through there and post that particular one. And this new function that we've added there is the ability to post the actual dividend journal. So this will obviously post the dividend transaction through to the shareholder and also the relevant interest there as well. So I'll go through into post dividend. In this case, I'm just going to post it under that category. Okay, go through, click on post. Okay, and that'll go through accordingly. So if I go through and let's save our entries there. So a couple of things there. If I go back out, if I go across to the accounting screen to look at the transactions, you can see here on screen, it's automatically saved there, the dividend transactions, and automatically obviously posted there the dividend transaction through as well. We'll see there accordingly. What you'll also see if I go back to the Div 7A screen as well, is you do have the ability there to export the worksheet now to Excel. So up to the very top there, you've got the option export worksheet. That'll then download to Excel. That's got my opposite page. And obviously you get the nice summary there in Excel. They can actually obviously save offline or use as part of your work papers there as well. So yeah, summary of everything there which is available. Okay, jumping across to the next one. So now into got Simple Fund 360. You do have the ability there to create this new report called a tax estimate or pay-as-you-go estimate, which is available there. So let's go through and have a look at this. I'll just change the entity I have selected. Okay, so if I go across now to the report screen, there's a new report there under tax pay-as-you-go estimate. So I'm just going to clear the options out there. So this will prepare two separate reports basically in the one report. So one is what is the tax estimate for the next financial year. The other is what's the estimated pay-as-you-go installments, which obviously can be beneficial depending on what time of the year you're actually preparing the prior year's financials. Across there in settings, you've got options of whether you'd like to include that pay-as-you-go estimate or not, or whether you just want to grab the pay-as-you-go only as well. Going through and previewing that particular one, you'll see there that what it will produce, as mentioned, is two separate pages. So one being what's the tax estimate for the next financial year, as you can see there, and that's obviously based on the information in the prior year SMSF annual return. What you'll also get there is, as mentioned, the pay-as-you-go estimate. What's the estimated installment payments based on the ATO's obviously GDP factors as well, as you can see there on the screen. Obviously that's just an estimate, and obviously it needs to be sort of matched there against the ATO figures, but it is using the ATO standard formulas. Cool. So chart of account. So we've added just a new account there, which is the actuarial fee. So that's account there 30075. So that'll be available there on your global chart. So go across to the chart of accounts. Okay, so new accounts there, and that could be obviously used there for the actual fee paid when obtaining an actuarial certificate. Okay, so next big one is around smart docs and in terms of utility bills. So previously with our AI model, for extracting data from bills, the model was predominantly built around water bills, and it did cater for some other bills, but not all. So we've now enhanced this AI model to be more of a generic model for bills. So this will mean for especially the funds which or trusts which invest in real estate. And those real estate properties obviously have a raft of bills. So that might be, as mentioned, it might be phone, water rates, council rates, whatever it might be. We can utilize and grab the information out of that accordingly. So if I go again across into, in this case, I'll just go across to the document screen. There was one I uploaded prior. So I've got here an invoice for electricity bill. So you can see there on the right-hand side the information that it's extracting out based on the electricity bill. And it will utilize this for two things, like always, is part of our smart matching process. We'll go through and automatically allocate the bill to the relevant transactions for smart matching. Where the transactions have already been coded, it will then automatically attach the transaction if there is a match transaction. So you can see here, it's trying to find the transaction there for $55.76. And obviously where it is attached to the transactions, it will automatically file there into the correct location within our work papers as well. But as mentioned, every single bill is supported there. If you do upload a particular bill and you find the information is not correct for any reason too, just remember there to click on the feedback, sorry, the feedback button, which is this one here, to submit it through to our team, and we can review that and automatically correct any issues that we do have. So that's a little icon there on the top right with the little exclamation mark within the comment box. Okay, so if you are using both Simple Invest 360 and CAS 360, previously we released a function which allowed you to import for companies and trusts the shell of the information. So that might be the name and address of obviously name and address of the company's ACN, ABN, etc. But we didn't include with that, I guess, beneficiaries and shareholders, as mentioned, that unit holders, the unit holdings and a number of shares held. So that's now been enhanced and we'll include that. So if I go back across here, I'll jump across into CAS 360. So it might be a company where I want to make sure where I've imported it, it's grabbing the relevant information from that, or it could be a trust that's already within CAS 360. And again, very similar that I want to go through and not just import the trust. So in this case, I'll select this family trust, or should be unit trust. Again, I want to import the unit holders at the same time. So let's go through and again have a look at this quickly here. So to do this, I can go to entity setup and say I want to create a new entity. I'll go for company first of all, and there's the option here, would I like to import from CAS 360? So I can go through and select this one. So I'll select, in this case, Little Monsters. This will go through and select the relevant information, as we can see here. And if I'm happy with that, I can go through and I'll just change that to 24 to begin with and create that. So what this will do at the same time, import all the relevant information. You can see in this case, it's got no addresses that I didn't have for that particular case, but now it's bringing through the shareholders and the share transactions automatically through. So I can go through and import that and that'll come through accordingly as well. Yeah, on the same basis, if I was to do the same for a trust, importing a trust again, I think I did have the Monster one again. Selecting the Monster Family Trust, it'll go through. Again, I'll select 24 for this one. It'll go through, create the trust automatically, pull through all the trust details that we do go through. And as you can see in this case, as it is a unit trust, it's bringing through not just the beneficiaries, but it's also bringing through all the unit holding transactions as well. Automatically there from CAS. So they'll come across and go through. Our next phase for this, of what we'd like to do, is to be able to sync continuously. So obviously we do allow that in terms of names and addresses, but in terms of the shareholdings with shareholders, unit transactions, etc., our next phase for this would be to go through and accordingly sync that. So if there is a change in CAS 360, it's automatically applied and vice versa. So in terms of the BGL update, that's it for this month. As mentioned, we do have an update which is being released tomorrow. So there's some exciting changes with that, including with Smart Docs, the ability for distribution statements, the ability for foreign dividends to be read, and a new property provider for valuations for commercial property, residential property, and rural properties there as well. So for the next session now, I'll just hand over there to Aaron.
Excellent. Thank you, Jeevan. Welcome, everyone. So today in our SMSF, Smarter SMSF update, I'm going to go through an area that has been bubbling around probably for the best part of 5 years, maybe more now. But ultimately, we do now have a bill currently in Parliament that will look to finalise the measures around the non-arm's length expense rules. So first thing that is important to understand is that where we have a non-arm's length expense that is incurred or isn't incurred, then we can end up in a situation where they invoke the non-arm's length income rules, and i.e. are taxed at the 45% tax rate. So as I said, the Treasury Laws Amendments, Support for Small Business and Other Measures bill, so it's kind of tucked in the back of that. But ultimately, what we are going to be focusing on today, as you can see in the diagram on the right-hand side, is this general expense provision whereby we incur a cost inside the SMSF, or we don't incur a cost that should have occurred naturally at a commercial rate. So we enter into a scheme effectively whereby those services have not been provided at an arm's length rate, And importantly, we're not wearing the trustee hat here. We're wearing our hat as an individual capacity. So it may be accountants, it could be lawyers, financial advisors. And ultimately, these measures are now going to apply a 2 times factor, or effectively apply twice the amount of that shortfall, and then tax that at the non-arm's length income rate. So there are a couple of important things to note as we work through this. So one is, again, going to the diagram, these measures have been in place since the 1st of July 2018. And these measures will also, with the changes being made, will go back to 1st of July 2018. So where we have expenses that relate to a specific fund asset, i.e. where there may be an investment property in the fund and the real estate agent may be discounting the services to their own fund for property management, that does not get caught in the general fund expenses issues that we're talking about today. That is a specific fund expense, and the rules as they currently apply do already apply to that scenario. We are focusing on things like accounting fees, as I've said before, and I'll go through a range of these items. And the ATO has had compliance guidance relief available through until the 30th of June 2023. So this is impacting SMSFs, in essence, that have had these arrangements in play from the 1st of July 2023. And in this instance, it's not only SMSFs, but small APRA funds. As I said before, the rules are looking to apply a multiple of 2 to the difference between the amount that would have been expected to have been incurred if the parties were dealing with each other at arm's length, and the actual amount that was incurred, which also includes where there was no fee that was being applied. So and I will go through an example in a minute. So one of the aspects that we need to now look at is to go, well, there's a cap that will be relevant to this situation as well. So we have this concept of what we call a fund's non-arm's length component. And ultimately it says, well, the non-arm's length component that we're calculating here cannot exceed the fund's total assessable income less deductions and naturally adjusted for assessable contributions and deductions against those as well. So ultimately we've got this calculation that goes, it's either the discount that was in essence applied, but based upon the total fund income, we can't be any worse off than in essence where those rules have been historically. And I'll go through and show you an example now to help highlight this a little bit further. So we have John here, and he has his own SMSF and is the sole member of his self-managed fund. So his accounting business, public practitioner, he provides compliance services to his own fund, and he's using Simple Fund 360 to do that work. And it may be being done by him. It may be being done by the staff inside his business. But what has ultimately been determined here is that he is utilizing the resources of his business, and therefore we may have a fee charged, or maybe a fee that is not charged, but we have an individual capacity hat being worn, not our definition under Section 17A being the trustee of the fund, because we know that he can't charge for those type of services. So when we look at this issue, the cost of providing similar services, because he is a CPA or a chartered accountant or IPA, that he does charge these services to the public at large, and therefore he can actually apply a fee here in respect to the self-managed super fund. So the question of, in this situation, is that the fee would ordinarily be $3,000, but he's ultimately provided that to the fund free of charge. So what we actually now have is an acquisition of accounting services under a scheme, or in essence, a non-commercial arrangement for the purposes of the non-arm's length income rules in Section 295/550. So what we now have to look at is we've got to say, well, what has the fund actually derived during that income year? So we have $20,000 in rent. We have $5,000 in deductions, which gives us $15,000 of taxable income. There's no assessable contributions here. If there were, we would then deduct those out as part of this calculation in the process. So because there was no cost incurred for the fund to get those compliance services done, i.e. they were done as a free service, then the law, once this has received royal assent, will effectively from the 1st of July 2023, so 2023-2024 financial year, will say we have a non-arm's length expense. That non-arm's length expense is something that has been incurred that's not specific to an asset, but relates generally to the overall income of the fund. And because we have an expense here that is attached to, in essence, all of the fund's income, i.e. the accounting services, then that difference between the market value of what should have been charged for that service and the actual fee that was charged will in essence be doubled. And then we would apply the 45% non-arm's length income rate to that amount. So you can see the calculation there. We end up with a $6,000 NALI amount that would need to be included inside the tax return. So after applying that non-arm's length component that I said there, what we need to say is we need to apply the lesser of, in essence, what the taxable income of the fund was during the year, which is the $15,000, or the $6,000 non-arm's length expenditure amount. So as the cap here, i.e. the taxable income amount of $15,000 is higher than the non-arm's length component being the $6,000 amount, so 2 times the $3,000 gap, the $6,000 amount is that amount that is taxed as NALI, and therefore we apply the difference, i.e. $15,000 of taxable income, less the $6,000 that is taxed as NALI. That would then be applied at the concessional tax rate of 15%. If we had ECPI in here, then we're only applying ECPI to the $9,000 of income that, again, is subject to the concessional rate. From a non-arm's length income perspective, we would ignore any references to ECPI and so forth in that claim. So ultimately, what we have here is the total tax payable in the fund being $6,000 times our 45%, plus the low rate amount of $9,000 at 15% gives us our $1,350. So we end up with $4,050. So under the current rules, or i.e. up until these laws come into effect, in essence, the current reference and the way in which the ATO has interpreted these rules will mean that the entire $15,000 would be subject to tax at the 45%, which is a real disproportionate outcome to, in essence, what is a fairly small fee that would be charged in the context of the overall assets of the fund. So this idea here is to limit the exposure of that tainted service, and therefore the fix to this, in accordance with the Treasury and the government of the day, is to actually say, get a set of commercial terms in place, or look at the arrangements to ensure that they comply with some of the views that the ATO has obviously spoken about in their law companion ruling as well. So in essence, your low tax component here is going to be whatever is left after we've determined what that non-arm's length component is in that particular year. So the question then is, well, what general expenses might get caught in this type of situation? So the big one here, and we've seen this throughout the ATO's rulings, and we've seen this through the examples in consultation as well, things like accounting fees are the most common issue that we're going to see. It also extends itself to actuarial costs, fees to the auditor, admin costs generally in managing the fund, trustee funds, which is a small APRA fund issue, compliance costs in dealing with the regulatory obligations. So kind of you can cross over accounting fees, admin and compliance costs there. And then there are 2 there. So general legal fees and general investment advisor fees. So those fees must relate generally to the operation of the fund. So a good example of legal fees might be the trust deed being updated in the fund, and it might be done, and the solicitor has done it at no cost to their superannuation fund, because that is adequately connected to the overall fund. then it would be captured in the general expenses issue. Whereas if we had a specific transaction that was done without any fee charged relating to an asset, and that applies both in a legal sense, but also in the investment advisor sense, then that is excluded from these provisions and get caught in the original specific expenses that I spoke about on my first slide today. So that just gives you some examples that you need to contemplate as you work through. If you've got your own circumstances, or you know of arrangements inside the firm that you might be working in, it is now the right time to be addressing this particular issue. The ATO is not providing any compliance guidance relief beyond what they've done to 30th of June 2023. So in terms of what else needs to be considered, these amendments that we currently have before Parliament, once passed, are to start on the first quarter after royal assent is received. So i.e., it's not going to start any earlier than the 1st of October 2023, but they will be in effect from the 1st of July 2018. Okay, so that reference to the 1st of October is somewhat relevant, but the laws will be backdated in essence to line up when those non-arm's length income rules were originally adjusted back in the 1st of July 2018. But it is also important to note that the PCG, so the safe harbour, or the ATO not applying compliance resources to these general expenses rules, is relevant to us because we have until the 30th of June 2023 to, in essence, get our house in order to comply with these particular views. And these views are important, and which is why we've kind of gone down the path that we have with these adjustments, because we will now, once these become law, see the ATO then go back and update that law companion ruling on this particular issue as well, LCR 2021/2. But again, we just need to wait and see where that kind of fits in the ATO's priorities. But there are things like putting policies in place within the firm that may then move the fund away from being tainted in certain circumstances. So there may be a discount policy that is provided. As long as it's provided to all parties within that arrangement, then we may then avoid getting caught into this situation. I think the most important thing that I can share with you today is to be really clear and ask yourself, what hat is being worn here, either by yourself or by the relevant client in this situation? So are you doing work in the capacity as the trustee of the fund? So you need to look at the facts and circumstances. Just because you might be using Simple Fund to do the work, if you're actually doing the work outside of hours in respect to your own fund, then we have seen private binding rulings recently that support that the use of Simple Fund 360 in that instance may be incidental to that entire process. But if we are then looking at and going beyond the scope of our 17A definition, which naturally includes that the fund cannot be, or the trustees cannot be remunerated for their services, where we are then utilizing a service and therefore the services of our business, for example, where staff might be actually being used to get that work done and stuff as well. Well, we're no longer wearing our trustee hat, we're wearing our individual capacity hat, and that sits within section 17B and allows us to charge a fee as long as we're doing that on commercial terms. And therefore, it is crucial that we either consider policies within our organization that deal with this issue specifically, or we actually go and start to charge a fee for the work that is being prepared in that particular instance. So we are finally seeing some movement. It's not necessarily the approach from an industry point of view that we wanted. There was a lot of lobbying around this. We have landed in something that potentially was going to be 5 times that non-arm's length component that I was talking about. It has been watered down to 2 times. So, but it is a much better outcome than the 45% on all of the fund's income because of that disproportionate approach in the way the law was currently constructed. So some good news in there, not ultimately, but you kind of get to a position where you'll suck it up and move on. So again, just to make you aware of what's going on, and naturally we'll keep you up to date with that going through and receiving passage along the way. So a couple of other things just from a Smarter SMSF point of view. We've been doing a lot of work in the background around our subscriptions. So just to be aware, if you are utilizing a subscription with Smarter SMSF and ordering your documents through Simple Fund 360, you do have the ability to use our user management console to track the counters that you have, the details of your subscription, the fact if you want to build some workflows around saved orders and accessing completed orders of different staff. The other thing Jeev had mentioned before with the release that's coming out tomorrow, there are some additional endpoints that we'll be working on and hope to get to show you next month that will allow you to bring down the deed history if you have that information within Simple Fund 360 to be able to do that. In addition to that, where you are doing your deed upgrade through Smarter SMSF, we'll be posting or pushing that information back into Simple Fund 360, not only the document itself, if you then want to utilize that to get signed, but also it will enable you to update the record in there. Potentially, we might be able to even backfill the history for you about the provisions of the dates and obviously where it's a Smarter SMSF deed and the like as well. So that's really the main things. We do have an upcoming webinar if you're looking at, I guess, technically some of the issues around dealing with trustee changes and some of the documents that you might need in changing trustees and directors and dealing with incapacity and so forth. That webinar is on tomorrow. Yes, it is tomorrow. And you can sign up for that on our Smarter SMSF website. So that's pretty much it for me, Jeeves. I will hand back to you.
Well, thanks, Aaron. Aaron, thank you for your time again today.
Yep, thanks, mate.
And all attendees, thank you for watching as always. And we hope to see you next time. So thanks, everyone. Bye.
Okay, bye.